Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 24th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it's a mega cap earnings cheat sheet week. So, what do you have on top for us today?
Yeah, we have five magnificent seven stocks: Apple, Amazon, Meta, Google, and Microsoft, and there's a bunch more.
There's a bunch more, but we're going to have a magnificent show for you all then. We'll try. We'll try our best. But let's go ahead and start with Apple, which is scheduled to announce fiscal Q4 earnings on Thursday, October 30th. Earnings for the tech giant are projected to climb 8% to 177 per share, and revenue is seen rising 7% to $102.1 billion. And here's why we're watching Apple. We'll want to know how demand is for that iPhone 17. We just got a couple of weeks of sales into the latest quarter here. So interest in those figures. And we'll also want to see if there's any dark horse interest in acquiring Warner Brothers Discovery. And Ed, Apple stock had a nice bump ahead of earnings thanks to some positive analyst reports. About a month after its debut, the iPhone 17 series is selling far better than anticipated. So, what is on your radar with Apple ahead of earnings?
Yeah, I mean, I think just want to see how is that holiday quarter going to come in? How is that going to do? It does seem like sales have been pretty strong, and that's really the ball game. I mean, there's services, there's other things, but it's the iPhone sales, and that also feeds into that long-term ecosystem. So even the stuff that isn't iPhone, so much of it is connected to the iPhone. So that's been positive. Uh, can it generate? What kind of growth can it generate longer term? That's the thing. It's like it's been struggling to get out of that high single digit, low double digit, which maybe where it is now. I mean, it's just such a huge company, but maybe there's a bigger refresh cycle. Maybe for whatever reason, people were holding off, and they are taking advantage, even though this wasn't supposed to be the big one. It wasn't. It was more of an incremental gain than a revolutionary change.
And do you think, in terms of the artificial intelligence integration, I know that's been kind of a concern floating out there for Wall Street. How do you see that uh, coming into the mix?
Yeah, I think that is important because they sort of been behind the curve on that. Though some people might say, well, they're not spending $100 billion every quarter on AI like the other four giants that we're going to be talking about. I mean, just the massive money on capex and hiring. So there's an upside to that. I mean, longer term, they need to get going. Can they do some more deals? They have some deals with various companies. But yeah, getting more AI integration would seem to be something that they need to do, fairly soon. But there is an upside to them being left behind.
And let's take a look at the chart then and see what the story is here. Because as we talked about, the stock rose about 4% on October 20th, broke above this 260 buy point here out of this long consolidation, but it did undercut that buy point earlier this week. But it seems like shares are really trying to hang out at the 260 level, Ed. So, what are your thoughts here on the technical action?
Yeah, when this first started moving above the 200-day line, the relative strength line was pretty low. It's picked up. I mean, it's picked up a fair amount. It's not at highs, but it has trended higher for a while. It's held up pretty well. And, while the market's been going sideways, this is sort of like maybe nudged up a little bit. So we've seen improvement over the past week or two. So it's decent. I mean, the thing is you're not, this has made a pretty good run, given that it isn't growing a lot, not really tremendous. So it has, how far can it go? Before it needs a rest. But the technical action is pretty good. The fact that it's pausing around these things actually has let the 50-day line catch up. So there are reasons to like it. I think if you go to a weekly chart, you can see that the relative, you can sort of see even with the daily, but there's just the relative strength line had peaked, at least a couple of years ago, and even before that hasn't made a whole lot of progress since the end of 2020, sort of gone sideways. I mean, that's because, so that's the situation there. I mean, it's like, if you're doing that, you could say, well, why not just buy the S&P 500? So that's just something to note, especially after this kind of run. Can it really make much more of a front? But it's been doing well lately.
Yeah, and what about volume? Because it seems like even with the rally, volume here has been kind of light.
Yeah, the last few weeks have been sort of light, that last pop, but there were some pops in there. It's not like there's been volume to the downside, and you can see how, you know, uh, the AD rating is an A minus, the up down volume ratio is a 1.3, readings over one are positive. So while there hasn't been a lot of volume lately, most of that's coming during a little consolidation anyway. There was one day you would have liked to see some volume, and there probably was some decent trade on that day, but uh, you know, generally, it does seem like institutions are picking it up over time.
And I know you mentioned the fundamentals, and in terms of this being single digit earnings and revenue growth here. I mean, again, what would you like to reiterate with the story here? I mean, Apple is just so big at this point. So, what are these growth expectations in your mind?
Yeah, I mean, it's just hard. These are fine. These are solid, but this is more like, it's just yeah, it's not defensive growth, but it's sort of approaching that kind of level where it's, like, oh, it's steady. People are going to buy the iPhone every once in a while. Yeah, services are going to pick up, and that's decent margin. But since they're, unless they get something game changing or like AI and they really take on and growth there, find some way. But even then, they're so huge in terms of their sales. It would take a lot to move that needle. Um, so, you just have to recognize what kind of company this is now. It's not the company that it was 10, 15 years ago when it might have this tremendous growth.
And in terms of how, if I'm sitting here looking at potentially buying this stock, how would you handle that then? Because again, we're sitting right at a pivot point here. Earnings are next week. So, how would you like to set that up? If you potentially maybe got an early entry when it retook some of these key moving averages, maybe you have a cushion, but how are you approaching that?
I mean, if you have a cushion, that's fine. And I don't think this is a stock that's necessarily going to have this massive move. It's going to have a solid move, but it's not something you expect, wow, it's probably going to have a 15% move on earnings, which also means another thing. If you don't have a position, you probably could find an option trade that isn't that expensive, as opposed to some names where it's like, well, it might move 8% and you're going to pay for that. Those would be the ways to go. If you have a decent cushion, it probably would seem like it'd be safe to hold into earnings.
All right. Well, let's move on and take a look at Amazon, which will report Q3 earnings on Thursday, October 30th. Earnings for the e-commerce player are expected to climb 10% to 157 per share, and revenue is projected to rise 12% to $177.83 billion. And here's why we're watching Amazon. That AWS growth is going to be key. There's still some tariff issues outstanding. Will Amazon be raising prices related to that? We'll also want to get an idea of what holiday shopping expectations are. And then again, plans, if any, to counter OpenAI working with Walmart, Shopify, Etsy. How is Amazon viewing the competitive field there? And then, of course, as we'll be saying a lot throughout this episode, focus on those CapEx spending plans and AI monetization. So, Ed, Amazon's web services system did suffer a major crash ahead of earnings, but it seemed like investors didn't care all too much. And, the focus has really been around that core part of the business. And it feels like shares have maybe struggled since last earnings in Q2. It showed that Amazon's cloud growth maybe accelerated at a lesser rate compared to Microsoft and Google. So, are there concerns there about that business? I mean, it's still the leader in cloud infrastructure, but are there any signs that Amazon's having trouble attracting AI related business?
I mean, I think there's concerns that it's just the growth rates are slowing or somewhat, or like we're not growing as fast as its rivals. Microsoft's becoming pretty big. So can they maintain that growth? And obviously you said capex for all these companies we look at here, but especially with Amazon, Google, and Microsoft, there's that monetization as well, monetization on the cloud computing arm. Can you do that? Uh, yeah, is the e-commerce, is it going to be a solid holiday quarter? the OpenAI is a real difficult thing because people don't really like, oh, I'm going to check out Walmart. I'm going to check out these other places. It's the trade-off is pretty good because it's like, okay, Walmart may get some business through OpenAI, and yeah, you don't get that, get people to get used to being on your site, but you get that sale. But with Amazon, they're used to going there. So yeah, there might be some incremental sales you could make with a chatbot from a third-party chatbot, but then you may lose that. Hey, we always got to go to Amazon. So it is a bit of a trick there. Can they do that? Or maybe the OpenAI stuff really won't pan out and people will go at it. But uh, this is one. The AWS is still where the growth, and not just the growth, where the profit is, because there's a lot of revenue in the e-commerce business, but they don't make a lot of money on the e-commerce, all in all.
All right, Ed. Well, let's take a look at the chart because, as we mentioned, shares seem like they've really been struggling since they undercut this 50-day line here back in August. And they attempted to retake that level here in early October, but were turned away from that 50-day line. But the good news is it's retaken that 200-day line. It looks like it's trying to establish itself at the 220 level. So give me your thoughts here on the chart and what you would like to see develop.
Yeah, I mean, when it first tried to move out before, like just before Q2 earnings, the relative strength line was showing some progress. And the thing is, Amazon hasn't, a bit like Apple, hasn't really outperformed for a while. Fell off, was made a comeback, and now has slid a bit. So now it's come back, and there's been some choppy action, some big gap ups and down. It hasn't been very neat. In fact, the last several months, there's been a lot of little gap ups and downs. It just doesn't feel, uh, very orderly. And so it is finding some support, but yeah, that RS line is basically at right around 52-week lows. So not a great sign. And there's a longer term trend. It's not really been outperforming in quite a while. So that's an issue. So it could get back above. One good news is that when Amazon reports, I think next, on that Thursday night, we'll have had, we'll have had some China trade talks. Maybe not the big meeting between Trump and Xi, but that'll be out of the way. The Fed will be out of the way. We'll already have earnings from Google and Microsoft, and the others. I think so. At least Google and Microsoft. So that will, there'll be a sense of Amazon has good news. It might have already rallied by this point. So you can imagine, aha, all that news, all that huge possible headwinds are out of the way. So that would be something. If it does show signs, might feel more confident. But is there better merchandise right now? There seems like there's a lot better merchandise out there.
So should investors be keeping their eye then on this kind of 50-day line? I guess that would.
Yeah, the 50-day line, maybe in that short-term high 258, that might be an area. But again, where is it? How does it, is this really a leader? Is this something that would be an issue? So that would be a place where you could get into it perhaps after earnings. I don't think you'd want to do it because it could go up there with other news. And then you have, then you have earnings because it was rallying into earnings, probably because other companies were doing pretty well in Q2. And then its actual results came down. So you can't feel confident. Well, Microsoft had good results. Surely Amazon will, well, that gets priced in. So I think you'd want to wait until earnings are out.
All right. Well, let's move on. We're continuing our mega cap earnings coverage here with Google, which is scheduled to report on Wednesday, October 29th. The company is expected to see Q3 earnings up 8% to 228 per share, and revenue is expected to rise 13% to $99.88 billion. And here's why we're watching Google. Again, it's all about those CapEx spending plans and AI monetization. I think we'll also be interested in hearing about the adoption of the Gemini AI app and how that's maybe impacting Google maintaining its strength in that search area. Google climbed earlier this week amid a report that its cloud computing business could add Anthropic as a customer. And another positive development, we saw comments from some of their executives about advances in quantum computing that could be bullish for Google stock. So, again, what is on your radar with Google and what is the news investors should know?
Yeah, I mean, you want to find out. I mean, one is growth is slowing down, so that's something coming down quite a bit to 8%. It's been slowing down, and partly because the numbers were getting tougher. So that's an issue. Is that okay? Again, another mega cap that's sort of like, well, the growth is sort of going into that high single digits, low double digit situation because this was growing faster. The advertising business is huge, and it does seem like AI helping as opposed to hurting. There was the concern a couple days ago about that OpenAI is coming out with its own search browser. So far, people aren't too worried about that. We'll just see going forward. But so and Google Cloud, that's supposed to show pretty solid growth once again. Again, that's and somewhat powered by AI. So it does seem like a number of some they have some. There's some of their ventures suggest, oh, there may be some quantum computing. Waymo is doing pretty well. Will that eventually turn to be something something that helps the balance sheet as opposed to, just as that it becomes something actually positive for them. So a lot of things there. While their core business seems to be doing well.
Let's take a look at the chart, Ed, because this one is a leaderboard stock. Shares are continuing to hold above that short term 21-day EMA. And, we saw a nice breakout back here in July. That was a first stage base, had a nice rally. But really looks like it's setting up this shelf area here, maybe the 256 area, a place to watch.
Yeah, I mean, it sort of came above there, and you could have bought that, at the time. It sort of backed off. It'd be great if it could pause here, and it would be almost a flat base. It came out too early. It was only like 4 weeks, so it wasn't long enough. But if it paused here, you get that more of that sense, and it's about as good as you're going to get. I mean, that would be because you wouldn't want it to drop down to its 50-day line or 10-week line after earnings. I mean, anything could happen, and then it could set up over time. But in the short run, that would be the buying opportunity. If it could pause right here and then move on earnings. The relative strength line, that one, which looked middling when it first moved out a few months ago, I was like, okay, what is it really doing? But it kept going. And, it's paused here, but not much at all. So the RS line is basically at highs, so that's definitely, definitely a different picture than some of the other names we were looking at. So a lot to like about this name because again, I think it's also their valuation wasn't as high. It's gone up quite a bit, but it didn't have the same valuation as some other names. So I think that's another reason why it was able to have such a solid gain. And you can look, see the chart, the volume. There's mostly blue skyscrapers there. There's not much in the way on the downside for the past few weeks. So AD rating a B, up down ratio, volume ratio 1.4. All pretty solid.
All right. Well, let's keep chugging along here and take a look at Meta, which is scheduled to report Q3 earnings on Wednesday, October 29th. Earnings for the social media platform are expected to climb 11% to 669 per share, and revenue is projected to rise 22% to $49.39 billion. And here's why we're watching Meta. The ad market should be strong in Q3 and Q4. We're going to want confirmation of that, and OpenAI Sora is beating Meta's Vibes app for AI generative video. So we'll want to know what Mark Zuckerberg is potentially thinking about doing about that, or what his plans are there. Meta stock soared to new highs after the company posted Q2 results that kind of blew the doors off expectations in late July. But it's really had a few uneven months since then. I think there's been an ongoing debate about the sustainability of this AI boom and the billions of dollars that Mark Zuckerberg is spending on this technology. So, give me your thoughts on Meta and what you're looking at here ahead of earnings.
Yeah, I think there's questions of they spent so much money in capital spending and hiring boom. Is that really going to pay off for them? I mean, they're getting some AI monetization, but there's so much going on there. Growth, yeah, was really solid last quarter, picked up, so while some other names were slowing down or just hanging around, really solid growth. Again, yeah, supposed to, see some slowdown but that's want to see, yeah, they just want to see that can ad business still strong and just signs that they're getting that, getting some payoff on AI given how much they're spending.
And we're looking at the chart here. This one forming a double bottom base with a 790.80 entry. I don't know if it's picking it up here on the daily chart, Ed, but kind of given the spirit here of a double bottom. And again, it seems like it's really been slumping as of late. This 50-day line looks like it's an area of resistance. That again, that relative strength line coming off highs as well. So, give me your thoughts on the technical action here.
Yeah, the relative strength line a little bit weaker. I mean, again, when the market's going up and up and up, it is hard not to if you pause. So, but it wasn't great to see that fall so far below the 50-day line. Um, Bouncing back, that's nice. Maybe a move above the 50-day line decisively around earnings after earnings could provide an early entry there. So again, low double digit or EPS gain seen. If you can do better than that, if you can see like, oh no, it's high teens and for whatever reason they'll keep things under control, uh, that would be a positive there. There's been so that you could treat it as a double bottom or just as an undercut from the prior base. It's actually, it's acting the relative strength line isn't at highs, but if it is looked better on a weekly because there was sort of a trend up. You can see how the relative strength line is clearly above where it was in 2021, 2022, 2023. So there has sort of been an uptrend. Yeah, the last few months haven't been great, and it's below some moving averages, the relative strength line. There's still sort of an upward bias trend, so looking better than some of the other names in here.
All right. Well, let's go ahead and wrap up our mega cap review with Microsoft, which is scheduled to announce Q3 earnings on Wednesday, October 29th. Wednesday is going to be a very busy day for you. We're going to be thinking about you. Earnings from Microsoft are projected to climb 11% to 336 per share, and revenue is seen rising 15% to $75.34 billion. And here's why we're watching Microsoft. We're focused again on that CapEx spend, and we'll be looking at Microsoft Azure growth. How high and how sustainable will that growth be in that business segment? And we'll also want to see if there's signs of any traction with the Copilot AI services. And Ed, in late September, analysts at Morgan Stanley called Microsoft their top software pick. They cited the company's ability to shed concerns about its, evolving relationship with OpenAI and the durability of that Azure cloud business. And we've also seen too PC shipments accelerating. So maybe a sign that the PC refresh cycle may benefit Microsoft here. They recently ended the Windows 10 operating system. So possibly a boon there. But your thoughts with Microsoft?
Yeah, so that just sort of like the iPhone may have gotten a bit of a boost, the whole PC ecosystem getting a boost. Not just sort of like it's not where the real growth is, but that's still such a huge part of their thing. So you get that, you get Azure, if that can show strong growth, because that's where the growth and where good margins are. They've touted that a lot of this is AI enabled. I mean, all the cloud computing folks, everybody throws out AI as much as they can. Yeah, it's important to see do the end users like on a more of a consumer or individual person in the workplace find value in that with the co-pilots and other thing is they really, there's all this effort. So AI is going to improve all these processes, and maybe they will, but on the individual worker, are they going to get that to pan out for them? And so yeah, that's what we're looking at. Still solid growth. I mean, it picked up the last couple of quarters, the EPS did, and so that was a positive, and revenue as well. Not supposed to continue, and that again, that's hard. It's such a large company to see that it's been growing a little faster than Apple, but still, it's hard to maintain really strong growth given its size.
And we're looking at the chart here Ed. On the daily. You probably looking at this as a flat base with a 555.45 entry level here. I'm sure you can look at the 531 area here as another possible alternate entry point. But it seems like Microsoft finding support here at the 50-day line and the 21-day line. So again, thoughts here with the chart.
Yeah, so that would have seemed like a pretty decent entry. And honestly, if it weren't for that prior quarter's gap up, yeah, there was also a trend line, so there could be that. If it weren't for that prior intraday high, this would almost be a handle because that would probably be if you sort of nudged away that intraday stuff, the rest of it is there because that's pretty close high up in the base from that perspective. So maybe a little low from here, uh, you know, um, but so that seems like a legitimate spot, 531 when earnings come out. It struggled with a relative strength line. It struggled for a while now. If you go to a weekly, this is when while it's again made a nice run lately. Uh, it's struggled for the past since, since late 2023. So the past couple of years, it's hasn't made a sustained relative strength run. So that's just something out there. There seems to have been faster AI kind of plays out there after initially leading, being among the leaders in there, but it's so definitely taken a back seat.
All right, Ed. Well, those were the big names on our radar, but of course, there's always more to cover. So let's take a look at Celestica. They're a electronic products manufacturer. That company is scheduled to post on October 27th. I'll switch back to the daily here, but this one looking like it's above those 21 and 50-day lines. Not super extended yet, but give me your thoughts here.
Yeah, I mean, there was probably some tight action, around, the low 250, like 261. But it's a little extended from that. And it wasn't, you want to get really close, when you're on a little short, tiny area. And it was messy. It was hard to get in there because it was up and then it was down. It would have been, on the right hand side, like right in there. Yeah, just sort of up and down. Then it gaps up and then it comes back down. It seems like it'll be extended. The relative strength line looks great. The growth has been great, but it doesn't seem like a really safe entry, out there. And if it performs well in earnings, well, then it'll definitely be extended. So may be just one that if you're not in it, you're not going to get a chance.
All right, let's move on to FTAI Aviation. Earnings there on October 27th. And again, looks like a little similar action, a little bit of chop here, but recovering from this pullback here in September, Ed. So, thoughts here on the chart?
Yeah, I mean, this short consolidation, nice support the 50-day line. It gets above recent highs. That could be an early entry. And you can see this as a short consolidation or it's a high handle to this longer base. It is nice to see this tighter. This base is sort of ugly. And there was a short seller report in there at one point, big ups and downs. It seems to be trading tighter, which, nicer in that regard. So it does seem to be tightening up, finding support with that area. So that makes it intriguing. Has strong growth. I mean, this is also, if you're looking for things, we've been talking about some slower growth names and everything, but this has had some really strong growth on the EPS and revenue side and it's set to continue for a little while.
All right, well, let's jump on over to Rambus earnings there on October 27th. Again, switching back to the daily. This one retaking the 21-day line here on October 23rd, but trying to break this recent downtrend here.
Yeah, if it weren't for earnings, this would look like a buying opportunity above the 21-day line, right around these short-term highs in the 100 level. On a weekly, I'm not sure if it got to the 50-day, I mean, it got to the 10-week line or not. Not quite. If it got another week or so, you might have a flat base, or it might be a couple weeks before a base. But again, earnings are coming up, so you wouldn't want to be jumping ahead of that with a new position.
All right, let's take a look at an industrial name with Caterpillar. Earnings there scheduled for October 29th. And again, this one had a nice gain out of this base back here in September. It's stayed above the 21-day line, pulled back here in recent weeks below the 10-day moving average, Ed, but this one looking in pretty good shape.
Yeah, it is. And this is a classic situation of a tight pattern next to sort of a wider, deeper pattern. So that offered nice opportunity. It's definitely extended now. It's also when are the earnings going to come in? I'm not sure where they might if they might be coming on this quarter. I can't remember, but it's like it's been this is headed for a pretty decent decline after sort of a middling 2024. So it's supposed to bounce back next year, and I think it probably needs to really show that it's going to do that. This is an AI data center play in the sense of construction equipment, so there is, and some analysts are calling this sort of an adjacent play as well.
Well, speaking of AI adjacent plays, let's take a look at Quanta Services due on October 30th. Again, this one tried to break out here on October 2nd. It's had some chop, undercut that buy point, but it's finding support at the 21-day line.
Yeah, I mean, I don't know what to do with it. There's a couple big volume days. This one has volume spikes to the downside, not much on the upside. It's around the buy point, but it's volatile. And what are you going to do with it heading into earnings? Because if you bought it around the buy point, well, there's no cushion. I mean, maybe if you got something lower, like around 400, there were some early entries, there would be something. But even that is only like 5%. It's not huge at this point. So You know, the last, there definitely can be some gap ups and gap downs. So might have to wait and see how this turns out with earnings. And you could also use after earnings this recent area as sort of a high handle.
Okay. And then, yeah, let's check in on Visa. The credit giant has earnings scheduled for October 28th. This one in a flat base with a 375.51 buy point and really tightening up around these conjoining moving averages here.
Yeah, it seems like 355 would be a nice area. Relative strength line has been sort of weak here. But so that's something to note. I mean, even beyond Visa itself, what it says about the health of the consumer, that'll be interesting to see what they have to say on that.
And let's hop on over to defense with Howmet Aerospace, earnings there on October 30th. Again, this one looks like it tried to break out, but has kind of stayed around that pivot point. Some recent strong action here on October 23rd. So, thoughts here?
Yeah, and I mean, like, if it stays in here and it's doesn't do a whole lot of earnings, I mean, it's in the buy zone. I suppose you could also use 198, as basically as an alternate entry, so it's just above that, so there might be a little more space. Strong performer, and it does seem like there's a number of aerospace names that are doing well, and the group itself is doing pretty well. So definitely one to watch. It's still a strong performer in the year.
Let's just wrap up with a look at AbbVie, earnings scheduled for October 31st. And again, Ed, another one that had a nice breakout here, really moved up, hit highs of 244, but has since backed off that, but looking for support at the 21-day line.
Yeah, and so consolidating here, maybe it forms another base. I mean, you could use something, a nice bounce off of that, maybe more as an add-on buy, like it bounces above these short-term levels. It might be better. I mean, depending on how the market condition, maybe people feel better about it, but either wait for the 50-day line, 10-week line to catch up or a new base, which would probably be coinciding. It would probably do both if it were doing something like that. The growth is supposed to pick up next year. So that is something, and it can be choppy. You can look over the left-hand side and be like, it's not just, oh, it's 8% every quarter. No, it's 2%, minus 23, plus 6, plus 12, minus 41. So it's supposed to be a big decline this quarter and for the Q3, but then strong for the next few quarters. There's something to note. It's just sort of lumpy. That just adds to the uncertainty. If you're going to have, but the stronger growth is, could make it worthwhile.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune into Stock Market Today. That goes live after the closing bell. And thank you so much for watching, and we'll see you all next week.